Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the week of the last week of July, as you can see, 29th of July 2024. And before going on to the week, let me show you the news. So this week was a very high impact driven week, as you can see. Monday there was no news, but from Tuesday onwards there was a lot of news, and on Friday it was NFP. So it was an NFP week, obviously, so the momentum tends to be very high on this kind of markets, on this kind of weeks. And as you can see, the MyFX book calendar and my Forex Factory both have a lot of news throughout the week, right? So it will be very tricky, meaning we will still trade, obviously, we will still look for the same freaking things every single day, but obviously there's news, so we also have to be a little bit careful, right? That's what I'm trying to say. So on the weekly time frame, you can clearly see on DXY, this is the demands, break of structure. This demand has been marked from last year, so you guys know now it has been 300 trades. So obviously now I know how to mark supply demands. Obviously now I clearly know what I need to do on the weekly, daily, 4 hourly, 30, 15, 5, 1. I know exactly which time frames are, why each and every time frames are used for certain different types of things, right? At least for me the most important thing on the weekly time frame is the previous weekly candle, because I trade according to that. Okay, so also the demand and supply are important, but yeah, because now the market is so far away from the demand, so it is irrelevant right now. So only focus on things which are near. So right now on DXY, we can clearly see the market has been bearish for a bit now, and it is reacting from some sort of demand, you can argue here. But obviously this demand I will not mark. Obviously this demand is valid and huge amount of buying happened from here, but technically this is not a demand, because this here is the demands. But no problem, don't worry, on the daily time frame I have marked some sort of demand here, so you will get to see that. So going on the next week, my bias was clearly bullish according to how these two candles closed. And if I show you the text, my DXY bias is bullish and GU bias is bearish. So that is exactly what you need to know on the weekly time frame. The previous weekly candles, as you can see, supply demand, fair value gaps. You know what I do on the weekly, better than me, I believe. Not better than me, come on, but yeah, you know what I do. So now going to the daily time frame, the weekly time frame analysis is very simple. No need to overcomplicate things. And yeah, on the daily time frame, we can clearly see the price is now in a pullback, meaning in a higher low. As we know, the market cannot go up forever and the market cannot go down forever. It has to go up, down, up, down. That is what market structure is, price action, meaning higher highs, higher lows, higher highs, higher lows. What is that? That's price action. That's how the market behaves. That's how the market moves, right? So when the market is at the higher low phase, what you do? You look for sells. And whenever the market is at the higher high phase, you look for buys, right? So going on Monday, my bias was clearly bearish on the daily time frame because of how this candle closed. And whenever the weekly and the daily time frame bias is aligning, that is when I tend to trade Monday. I have also written the call out, I will show you. And also on DXY, it made sense to go and fill up this weekly fair value gap slash the daily fair value gap that was here, a huge fair value gap. On Monday, it made sense to go and fill up this fair value gap, and literally it was also giving a pattern. I don't know if you guys know or not, but at my previous strategy, I have learned so many things about the candlesticks. This is called multiple week rejection candlestick. Whenever a multiple week rejections happens from a zone, it is clearly showing that the opposite contrary is stronger, meaning it is a bullish pin bars, or you can say bullish candles from this sort of zone with huge wicks. So on Monday, it is high probability to buy. So if you are looking for sells on GBP USD, I would go to the 4-hour time frame to look for some sort of supply zones. On the 4-hourly, we can clearly see lower highs, lower lows, lower highs, lower lows, higher highs, lower lows again, change of characters, lower highs, lower lows, break of structure, right? So on the 4-hourly, we can clearly see the market is breaking structure, changing characters to the downside. And yeah, on the hourly time frame, whereas on the hourly time frame, the most important thing is on the H4 time frame, we look for the candles, how it's closing, and if there is some fair value gaps or supply demand, the same sort of thing, right? But we are intraday traders, so for me an important time frame is H1, because I watch the H1 time frame for market structure, price action, and decide my trading according to that. And also the H1 time frame, H1 candles give us so much confluences to take a trade. So clearly we can see the MAC model, right? On Monday it was a MAC model. It was a MAC model, as you can see. 11:30 starts our at 11:30 we start to look for a trade. We can clearly see a supply zone, boom, lower highs, lower lows, lower highs. This supply zone was respected at 11:30, so that is when I entered the market. But to be honest with you, at the live markets I would not take this trade, but because it's the back testing, I've back tested. You can learn from it. It was a MAC model. We did got our 1:3, and not only 1:3 but a 1:10 fucking 10 risk to reward. But this was a low probability trade, so I didn't even journal it. I didn't even give importance to it. So if I show you the call outs in our timing, this trade was only valid because it was in our timing, which is 7 a.m. to 10 a.m. UK time. So MAC model we execute in that timing. The execution of the trade is very, very important, bro. Higher time frames anyone can learn. Where and why, the why and where is important / it's easy. But the holy grail in the market, if there is any holy grail, is knowing when to enter the market and when to exit the market, right? That is called when will you enter. So yeah, if you can learn that, which I am now I am working on that. So soon, whenever on Monday the daily bias and the weekly bias is same, we tend to trade. So that I have already told you. In our timing we got our continuation setup, so obviously we took this trade, and a beautiful trade on the back testing, as you can see, right? So this was Monday we got beautiful buys, as you can see. And now that is when I go to the daily time frame again to look for some sort of bias. So clearly we can see on the daily, this fair value gap was filled to the T. This daily fair value gap now got filled to the T, and this demand zone got mitigated on the daily time frame, which was literally, this was the low that caused this higher high. So if I draw the Fibonacci retracement, the 70% retracement happened, meaning the 80 and above percent retracement happens. And on Monday we got a beautiful rejection from this demand zone right here, daily demand zone. And Tuesday I will be looking for buys on GBP USD, right? Obviously I would think that many people who trade mechanically would think that, but when I go to DXY, even DXY is looking kind of bullish right here, right? Yes, you can argue it has gone up and filled up the fair value gap and then rejected, but no. According to how this candle closed on Tuesday, it was so unclean for me. Like, it was clearly bullish on DXY, and on GBP USD it was also bullish. That is when I go to Euro, and Euro was fucking bearish again. So to be honest, on Tuesday if I took a trade, it would be Euro. 100% I would trade Euro USD for sells on Tuesday if I would on the live markets, but obviously I'm back testing, so I can only trade GU. So what I didn't trade it GU on Tuesday. I waited for the candle to close, and whenever the bias is not clear, it's best, bro, to not trade. Not trading is trading, as I've told a gazillion of times. Sometimes not trading is better than trading, because if you not trade a particular day, you get the bias for the next day. So also Monday was no news, and Tuesday there was German prelim CPI whole day news. So Euro also was very, very tricky because of news, and there was New York news, as you can see. So going on Wednesday is the ADP non-farm employment change and a lot of other news, Euro news, right? But on GBP there is no news. So according to how this candle closed on Tuesday, on Wednesday I will look for sells, right? You will believe, right? So you will look for sells. So going on DXY also is sells. What the fuck? Literally both are doing same sort of things, DXY and GBP USD. So that is when it's very, very tricky to trade. So what I did again, yeah, it might sound corny, but you can clearly see I didn't trade it again on Wednesday. Not trading is trading, as I'm telling you. The market is now, right now the market is trading between this high and this low on the daily time frame for Monday, and whatever is happening here, it's accumulation of orders by the big banks to make a huge move to the downside, as you will see in this back testing. Okay, so on DXY we can clearly see a huge bears came on the market on Wednesday. So obviously going on Thursday my bias is bearish on DXY and bullish on GBP USD, right? So going on Thursday I will look for buys. Now my bias is kind of clear. Now they are kind of aligning with each other. But if I quickly show you the Wednesday I didn't took a trade on Wednesday, I believe. Maybe I did. Okay, so I did took a trade on Wednesday. It was a buy, And you may be asking why you took a buy on a market which was not clean, right? So this was a buy because of this Asian range sweep. The Asian low liquidity got swept here, and it was a break-even trade. As you can see, it was not a winner. Market went up, came down, gave us our MAC model here after the London session, and also the bias was not clear. So basically this trade was invalid, and it is no use to show it to you guys because it's an invalid trade, and it was not a good trade to take. So going on Thursday, I will look for buys, and aligning my bias with DXY, we can clearly see it was sells. So on Thursday, I will look for buys on GBP USD. That is when I go to the 4-hourly time frame. On the 4-hourly time frame, you can clearly see the market is trading between this low and this high. So I told you, right, I now understand which phases are nice to trade, which phases aren't nice to trade. On the 4-hourly time frame, you can clearly see this is the lower high, lower low, and the market is literally trading between these two zones. That is when I tend to not succeed, meaning that is when it is called a low probability market, at least for me. Because if it was trending, it was going down, it was so higher probability, and we are just following the trend, so it was making so much sense. But here we can clearly see the market is trading between a high and a low. That is when you don't want to trade this. But obviously if I get something, I will look for it, because the market is not perfect and you are not gonna get the perfect ideal condition every single time, right? So you need to adapt to the conditions. So obviously going on Thursday, I was looking for buys. So going for buys, I will look for some sort of demand zone. On the H4, we can clearly see there is no demand zone because the market is trading between these lows and these highs, a particular high and low. So waiting for the H1 to close, because why not? I was looking for buys, and what happened? The next thing you know, on 1st August 2024, there was market crash. There was market crash because of the US economy. US economy was, people were very fearful in the market. The people are either fearful or greedy, right? These are the two emotions, main two emotions in the markets: fear and greed. Fear of losing, fear of missing, so on and so forth. Greed means more, right? Everybody has that. You can't let it go, but you can control it. So you have to control it. Only the traders who can control it becomes profitable. If you can control it and follow your plan, bruv, you are already profitable. It's just a matter of time. I am a profitable trader in my mind already, but obviously I'm waiting for it to become a reality, right? So here we can see the market crashed, boom, to the downside. So obviously it made no sense to take a trade on Thursday. On Thursday, I didn't take a trade. And also there was huge news on Thursday, right? So it was an NFP week, and going on Friday it was NFP. So also an interesting thing to keep in mind. So even Thursday was a no trade day for me. Very, very tricky week, bro. To be honest, this week was a very, very tricky week. Monday made a high and a low, very, very volatile. Tuesday, Wednesday kinda did nothing. It was not aligning with DXY, so not a high probability trade to take. Thursday literally went to the downside, so it also followed a drop base drop continuation pattern, supply continuation pattern. So going on Friday, now my bias is so clear. Going on Friday, just if you didn't trade it Monday, Tuesday, Wednesday, freaking going on Friday, your bias would be so fucking clear. You don't need to trade always, bro. Get it out of your head that you need to trade every single day of the week. No, you need to trade only when the bias is clear, when it's high probability. Like here, we can clearly see here the bias was not clear, so I didn't take the trade. But on Thursday the bias got clearer. So on Friday it made sense to look for a trade, right? So if I go to DXY, the same sort of thing. After how this candle closed on Thursday, on Friday obviously I will look for buys on DXY, which will be sells on GBP USD. So that is when I go to the H4 time frame. On the H4 time frame, we can clearly see a new break of structure happen right around here. The market broke structure from this low, this high and this low. What I said, the market was trading between these highs and these lows. Accumulation, drop, best drop. The big banks accumulating orders to make a huge move, which it did, right? So the technicals are playing out to the teammate. My understanding of the technicals is like literally 80 to 90% now in 100. I'm not being arrogant here. I literally believe in myself so much. And yeah, according to how this Thursday candle closed, on Friday literally I was looking for sells from a closed zone because of the momentum. I decide my zones according to the Asian range and the previous day's close, right? So I waited for the Asian range to close, and after this Asian range close, for me at least, it didn't make sense. A good supply zone would be this supply zone to trade from, but for me it didn't make sense to go all the way up here and then come all the way down here. So that is why I was looking for a trade from some sort of closed supply zones, which played out to the T. Let me show you why. So this Asian range, we can clearly see right here, it was a mechanical model. This was a M30 supply zone, Asian high liquidity sweep. This trade I have also back tested. If you want to see, you can see on my other videos. And yeah mate, Asian high liquidity sweep, previous structurals, kind of liquidity sweep, M15 rejection, beautiful M5 equilibrium entry. It was a Mac model that I have learned from Rob Dono, right? This strategy that I'm using right now, it's Rob Dono strategy, not his strategy, but obviously I've learned it from him and Sal Sanchez. So yeah, it's clearly working, and literally in 30 minutes I could have passed any Proform challenge in the world if I risked the correct amount, right? So this strategy literally works, and it was at our timing, which was 10 a.m. to 10 a.m. 7 a.m. to 10 a.m. UK time, and also it was aligning with the daily kind of volume. As you can see on this day, the Mac model made so much sense because of the previous day's volume and also the Asian high sweep, boom 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 boom. So because of the previous day's volume, the mechanical model made so much sense. So while analyzing the markets for the higher time frames, when the markets for obviously from previous week highs and lows, you target the higher time frames, and for lower time frames analysis, don't overcomplicate it. On 1st August the market literally crashed, and if you guys want to see all of this important call out that I write down on the markets while analyzing, you can go on to my important call out section to watch that. Okay, so this was the weekly analysis for you guys. Hope you guys learned something from this, and comment down what you need in the future. Okay, so yeah, Bosh, catch you on the next video.